In this video, I'm going to teach you how to get a loan on a travel trailer, toy hauler, fifth wheel, motorhome, fifth wheel toy hauler, etc. I'm going to teach you how to get that loan with less than stellar credit, or you may call it bad credit. Welcome to HBRV Lifestyle. They call me the Honey Badger because I give it to you straight and transparent about the RV business. And this video might sound offensive to some folks. It's not meant to be. This video is for information and education purposes only. It's basically to arm you to feel confident when you go purchase your next travel trailer or toy hauler, whether you buy from the dealership, whether you buy private party, you're going to have the confidence on what you need to do to secure that loan. All right, now how I'm going to break this down is in 4 sections. The first section is we have to define bad credit. This is probably the second most important part of the video. You're going to want to really pay attention to this. We're going to define it, and it's a little complicated, so I'm going to try to simplify it and make it as short as possible. The second thing we're going to talk about is we're going to talk about the terms of the loan, down payment, and what the stipulations are. That's probably the most important part of the video. And then third, we're going to talk about the difference between new and used when it comes to this type of credit. And lastly, I'm going to go over where you can find a loan, whether you're going through a dealership or a private party, how and where to secure that loan. So let's get started. So the first thing we're going to do is we're going to define bad credit, okay? Now, to define bad credit when it comes to an RV loan is completely different than an auto loan. When you go to an auto dealership, the prime credit score starts at 640. Whether that's Equifax, Experian, TransUnion, 640 and above, depending on what your state uses. Some lenders in some states use different FICO score models. It's not all the same all the time, okay? What you see on your phone will be different than when a dealership at the auto level or the RV dealership pulls the credit. It will be different when the lender pulls the credit as well. So what your phone is for is basically a guideline. I use the phone like, I don't know, Credit Karma to track my credit, but the scores in there are not very accurate at all. Okay, so just have the understanding of that. It's great for tracking it and understanding it, but it's really unreliable when it comes to the actual FICO scores. Okay, in the RV world, 719 or less as a FICO score is considered subprime. Now, there is an exception to the rule. Some of the credit unions that I use and other dealerships use will be able to consider fair credit 670 to 719. But for the majority of lenders out there, if you are under 719 as a FICO score, you are considered bad credit. They basically look at 720 to 750 as being fair credit and 751 and above to be prime credit. Now, the reason why is because this is not an everyday item. This is actually a high-risk loan to the bank. The reason why is because if you look at 2008, 2009, the first thing to go is what? The toys, your side-by-side, your motorcycle, your motorhome. Those are the first things to go back to the bank, not the car and not the house. So it's a high-risk loan in their mind. Now, in conjunction, let's say that you're an 800 FICO score, but you have a bankruptcy 6 or 7 years ago, you're considered subprime credit. If you've had a repossession that is still on your credit bureau, you've had a, what do they call it, foreclosure in real estate, you've had to file some sort of bankruptcy, it doesn't matter what your FICO score is at that time, you are considered subprime credit. You are considered bad credit. Now, I'll give you a great example of this. There are ways around that, but in another video, I'll discuss fair credit. So make sure you subscribe to the channel, hit the notification bell, because I will be doing a fair credit, kind of talk about the exceptions to the rule in another video. The reason why I'm not doing it here is because I get a lot of people in the comments that just say, get to the point already. Oh my God, you take forever to explain things. Well, I'm trying to help everybody, right? So I'm going to do a separate video on that. The other thing that we need to define as bad credit is anyone that has high credit card debt. Now, this specifically more has to deal with independent contractors or people that own businesses. A lot of times you float your bills using your credit cards until cash flow comes in. So it's always this big roller coaster ride with your available revolving credit. So if your available revolving debt is above 50%, which means you have more than 50% maxed out on your credit cards, even if there are some cards have zero and some cards close to the max, they consider that subprime credit or bad credit when you don't, actually, no matter what your FICO score is. I've actually personally seen a 755 score that had 60% usage of their credit card. So, like I said, there's a lot of complications to it. So, to recap this section, any FICO score that is 719 or less, there are exceptions I'll talk about in another video. If you've had a bankruptcy, if you've had a repossession, if you have had late payments or heavy credit card debt, or if you've had a, I just thought about it and dawned on my head. I just said it on real estate, a foreclosure. Okay. So that's a great segue into what the terms are going to be. Okay, the terms of the loan. We're going to talk about interest rate, how many years you're going to get on the loan, more than likely, the required down payment, and the stipulations of what the bank's going to require. Okay. Now, I really recommend you get a piece of paper and a pen out for this because this gets a little complicated. So the more you write down, the more information you're armed with. So let's start with the terms of the loan. How many years can you get? Well, it depends on the amount financed. So if you're financing under $50,000, your max term on most of these loans is going to be 10 to 12 years. Yeah, I know. A lot of people say you can get a 20-year loan or 15-year loan on a coach. Yes, you can if you have great credit or good credit. So those folks that are between that 721 and that maximum score of whatever it is, 850, 900, whatever scale they're using at the time, those folks can qualify for a 15 or 20-year loan if they're financing 25,000 or over 50,000 depending on the bank. When it comes to subprime, a lot of the loans are maxed out at 12 years unless you're financing over $50,000. Then some lenders will allow you to go 15 years on the loan. Remember, to them, this is a high risk loan, so they want to do a shorter term and want to try to get you to pay off the loan faster. When it comes to a subprime lender, and I'm going to use one of my favorites that I use because I can usually get them by a lot of credit, especially if everything makes sense for them, is Marine One. When I got basically a lesson from the folks at Marine One, their goal is a third of the people are going to pay in full. They're going to pay as agreed. A third of the people are going to pay off the loan early. And then a third of the people are going to go belly up and basically get the coach repossessed. So 66% of the folks that they do loans for, they're expected to actually make a little money or actually totally pay off the loan or trade in or sell the unit prior to the term of the loan expiring. So the reality is that they don't want to go 20 years on a term with somebody that doesn't have a great credit history in the mind of an RV lender. Now, cars are different because cars usually are a 5 to 7 year loan, maybe an 8-year loan if you're lucky, max. So there are programs with more loan terms than that, but for the most part, most of your lenders, even the factory lenders, their best rates and their best terms are usually on the shorter end of the spectrum. So it's still a longer term loan than you're going to get on a car or a truck, but it's not what it would be with a prime credit score and prime credit history. Okay. Number two, the interest rate that you should expect. Now, this is where things get a little like rocky, okay? Because there are people out there that want to tell you that the max rate should be 10% on a loan with an RV. That's not true because there's people with prime credit scores that get 9.99, 10.99 all the time. But there are subprime lenders out there that will take a 730 FICO with a bankruptcy and give them a 10% rate. And then there are subprime lenders that will give you a 19.95% rate. So it's a big swing between 9.95 and 19.95. And there is one lender in the industry that still does 8% for subprime credit. That subprime lender is someone who actually has a 750, 740 FICO, but maybe had a bankruptcy. And I'll get more into that when we talk about fair credit, but there is the possibility. But for the most part, you're going to be between 10 and 19.95% interest within the spectrum. So this is what I always recommend people do. When you're shopping for a travel trailer, get an RV loan calculator, calculate 10 years at 19.95% at, let's say, 20 grand. That gives you your baseline payment. And that is what you should figure out, what that baseline payment is, and then go shop that dollar amount, whether it's new or used. Now, let's just say you do that. And let's say you get approved for 13%. Your payment's going to be lower. You could take a shorter term and you pay it off sooner and build your credit history. So one of the things that I really try to focus and hone in on with folks is don't let the interest rate scare you up front. Okay, because more than likely you're either going to trade this in or sell it within 3 to 5 years. So the interest isn't going to compound. Number two is what you should look at too is more than likely you're going to get approved for a lower rate if you got a 670, 680, 665 score. You probably get approved for a little bit better rate, but that way everything comes down instead of you trying to fight an uphill battle and shopping for basically a unit that is outside of your price and your payment budget. The third thing is down payment. So down payment minimum that you're going to need is 15% down. Minimum. Now there are programs for 10%, but reality is if you want the bank to buy the loan at a better interest rate, you need to start at 15% down and go up from there. The more down payment you put with these banks, the more likely they're going to give you a little bit longer term and they're going to give you a little bit better interest rate. So let's say the baseline rate is 19.95 for you. But you know what? You put 25% cash down. Let's say you're buying a $20,000 used travel trailer and you decide to put 6 grand down or 7 grand down on that travel trailer. They might reduce the rate by 4%. And instead of doing a 7-year loan, they might do a 10-year loan because you put them in an equity position. Okay. Now, what I will tell you is with these interest rates, by 2027, 2028, if you're going to hold on to that travel trailer, make sure you, as you rebuild your credit, get those offers, sign up for a credit union, get those offers in the mail of refinancing. So that way, when rates come down, you can go refinance that loan for a lower rate, shorter term, and pay it off faster. Okay. I'm all about paying off stuff faster, guys. I always have been. I always tell people take the maximum term possible, but pay that sucker off as soon as you can, right? The minimum payment is for the months that you're going to go out and actually use the thing so you have cash in the bank to be able to go enjoy it. And then the months you're not going to use it, oh, heck no, just start paying the principal on that sucker, right? Get that loan out of the way, right? Pay down that principal, get rid of that interest, get rid of that loan, and rebuild your credit, right? That's what I always say about these type of loans. Okay. Now, when it comes to the stipulations of the loans, stipulations are this, and I want you to write this down because people that are self-employed are going to be super pissed. Bank statements are not a form of proof of income. 95% of the loans that I have done through these type of lenders require proof of income, proof of residence, and require proof of insurance. Okay? Proof of income is paycheck stubs or tax returns. Now, if it's tax returns, they need 2 years. So unlike a car that'll take bank statements, the RV world needs tax returns. Now, there is exceptions where there is 2 lenders now that will take bank statements, but your interest rate skyrockets. Okay? They want to see what your net income is or your adjusted gross income is after your top line expenses. So you usually have a top line, Then you have a bunch of stuff you get to write off. Then you got your adjusted gross income. And then after that, you got stuff to get down to the nitty gritty of your net. So they're looking at adjusted gross income. Now, a lot of times, if you have a Schedule C or Schedule K, they'll basically allow back-end depreciation. So again, one of those situations where tax returns are a requirement if you're self-employed. Paycheck stubs are required if you're a paycheck employee, along with a possible W-2. Okay. Proof of residence is mostly to prevent people from actually moving out of their apartment and living in a coach. Now, I'm not going to tell you that I haven't seen people that buy a coach and then 3 months later end up moving into it because things happen. I'm not going to say that doesn't happen or does happen. I'm just going to say that the lender doesn't lend full-time RVing. So you're going to need some type of utility bill, like an electric bill, a water bill, maybe a bank statement in that respect for proof of residence may work if it was actually mailed out to your home, not electronically done through email. For the most part, it needs to be something mailed to your home that was stamped with an envelope, and it cannot be your credit card statement. It cannot be, anything of that nature. It's got to be a utility bill in your name. Insurance is a necessary thing when purchasing an RV. I'm sorry, there's no getting around it. It's just the way the world works, okay? Full coverage insurance with a binder is going to be required before you pick up the RV. So for them to fund the loan and you pick up the travel trailer, toy hauler, you're going to need an insurance binder that binds the coach to a specific policy, which may be attached to your truck or your auto, not a big deal. Has to have the lender's address and name on it. It's got to have your name and address on it, driver's license, all that stuff has to be done. They want to make sure that if anything happens to that trailer, that loan is covered. Okay, so that's basically where we need to go with that. Now that's a great segue into the next segment of the video, which is talk about new versus used. Now, when we talk about new versus used, when it comes to subprime credit or bad credit, it is easier to get an approval on a brand new travel trailer than it is a used one. You get a better, longer term loan in a new travel trailer than you do in a used one. Let me set you an example. I have a gentleman who is actually a police officer. Okay, he's a 674 FICO score. Very clean credit because I have a couple of collections that were basically done because of his divorce, went through a lot of stuff, has a little bit heavy credit card debt, not horrible, but a little heavy, good income, good provable income, so on and so forth. When I put him into a used travel trailer that was about $15,000, his actual term he was approved for was 5 years. But if I put him in a brand new unit or a newer unit that was, let's say, 9 grand more, 10 grand more, they were willing to go to a 12-year term. The payment was almost identical. The down payment was identical. So on that $15,000 trailer, they wanted $3,200 down. On the brand new travel trailer, they only wanted $2,800 down. So there's a big difference between new and used on what a lender thinks. So a lender wants to shrink the term and raise the rate on a cheaper unit. So the cheaper you go, the more you're going to pay a month compared to what the price of the unit is. Okay, now there's nothing wrong with that. I want to make sure I raise my hand and say there's nothing wrong with that. I have a gentleman who bought an $11,000 travel trailer from me that only was approved for a 3-year term. It was a higher payment than a new one, but he only wanted to spend 11 or 12 grand. Nothing wrong with that. We all have a budget. We all have a gut feeling of where we want to stand and how much we want to pay off. Okay, there's nothing wrong with that. There are people who live and die on, I'm only going to spend 10 grand or 8 grand, don't care what the payment is. And then there's people who are like, you know what? At 12 grand, if I'm going to pay 400 a month, I might as well buy something newer and nicer. Neither side is wrong. Neither side is right. It's all personal preference. Okay, so I want to make sure I hear that point. Now, for those of you who go, Just pay cash. That's all you got to do. Just pay cash, everybody. You know, you pay cash and pay cash and pay cash. Well, unfortunately, for the folks that can't pay cash for a nice RV, which is what I say the other day, 87% of the people who buy one every year. I understand the people that want you to pay cash and don't want you to take loans. The reason why they do that is because they want less RVers out there. They want to pump up the price of their units so that way there's less buyers and less inventory. So I get it. Their goal is a lot different than the folks that are regular everyday RVers, okay? But you'll see that in the comments section, believe me. Okay, now, that being said, the other difference between new and used is the percentage of down payment. Now, I covered this a little bit, but when it comes to a used RV, no matter if you're buying a motorhome, a fifth wheel, a travel trailer, most of the time, they're going to want a bigger percentage of down payment than they would on a new one. So on a new one, probably 15%. On a used one, probably closer to 30%. Now, that dollar amount might be about the same. But if you're going to go in to a situation where you're going to buy a $10,000 used travel trailer and you only got $1,000 down, I got a video for that I'm going to work on. There is a way to do it, but it will not be a traditional RV loan. It won't be a 10-year loan or 12-year loan. It's going to be like a 2 or 3-year loan. But I'll get into that in another video. But for now, just realize that you're going to probably need, for a traditional RV loan on a travel trailer toy hauler that's used, you're probably going to need a bigger percentage down. So what I mean by that is, let's say it's a $20,000 toy hauler and you got a $40,000 new one. So you got a $40,000 new one, $20,000 used one. With the new one, you're probably going to need like $5,000 down. With the used one, you're probably going to need $5,000 to $6,000 down. So you probably need the same down payment. Obviously, the payment on the $20,000 loan is probably more than likely going to be a little less than the $40,000 one. But just a reality that is a big possibility. So now let's get into the last segment, which is where to find the loans. Now, let's just say up front that this is an easier loan to get at a dealership lot than it is on your own. I want to make that very clear, very upfront, okay? When you are dealing with credit below 719, or you've had a bankruptcy, you've had a foreclosure, you've had a repossession, something of that nature, it is easier for the dealership to get you a loan than you to get it on your own. However, there are a lot of folks out there that would rather buy a used travel trailer from private party. Some of it has to do with sales tax, like if you buy in Nevada or Arizona a private party used trailer or used motorhome, you don't pay any sales tax. Well, if you go to the dealership, you do. There are also times where, and it's not very common practice right now in 2026, but there are times where the pendulum swings where dealers are more money than the private party market. Right now, the private party market's way higher than the dealer market. And then lastly is, there's a lot of folks that just don't believe in buying from a dealer because they think every dealer's a ripoff. Totally get everybody's sense. That's your own personal preference, not for me to basically change your mind. So if you're going to a dealership lot, you want to bring your paycheck stubs, your W-2, to the dealership that you're ready to purchase from. Don't have everybody run your credit. Okay, that's the biggest mistake a lot of people make, is run my credit and see what you can think. Forget all that. You already know what your credit is. You already went online, you did your calculator at 19.955%. You know what price you need to shop for. You know what that price is going to help you get to your payment or below your payment budget, and get to your down payment budget as well. So you've already done all the homework. Now you're ready to bring your paycheck stubs, your utility bill, your W-2, your tax returns, whatever you may need when that sends. So that way the dealership can get you the loan. But let's say you want to go and get it privately, or you want to shop the loan at the dealership outside of that. The first place to look is a place called SCE Financial. Now, SCE Financial does deal with RV loans from bad credit to outstanding credit. Now, they are, without a shadow of a doubt, the toughest, weirdest financial lender I have ever dealt with in my career. Doesn't mean they're bad. They just a little out there. Now, I'm going to link a lot of this in the description box below. If you don't see it the day that I post this, make sure you check back in let's say by the end of January, and I'll have all those links in there, okay? The next thing to do is to go sign up for your local credit union if you haven't already done it. A lot of times a local credit union will offer you a line of credit on an RV at a certain dollar amount. Okay. Now, it doesn't mean that you're going to get approved right away, but it is something to use and shop to use as a negotiation tactic. Okay. Now, I'm going to warn you that most credit unions will not deal with anybody below a 660 FICO score. It's just a plain fact of life. Okay. SCE Financial actually has a better program for folks that have subprime lending. The third place to look is called ACT Financial. Now, they are mainly out of California, but Gabriel does do loans outside of this. ACT Financial mainly does used motorhomes. They don't do towables. They mostly do used motorhomes. Again, one of those situations, shorter term, higher interest rate. They actually are above 19.95, but they deal with a lot of the older motorhomes as well. And the last place to really look, and that's really going to be beneficial to you that you may not even realize happens, is ChatGPT. So what I would do is I would put your credit profile, type it out in ChatGPT and say, find me a lender that will lend on a travel trailer with this credit. A lot of times it will come up with these weird, off the grid, couldn't believe they exist lenders that even I don't know about. And a lot of times those type of lenders, they might be 25, 26%, but maybe, they do a 3 or 4 year term. You're only borrowing 8 grand, 9 grand. So it's not going to break the bank or kill you to pay that kind of interest on a 3 or 4 year term if you're buying private party and you're saving the sales tax, right? So again, one of those situations that you just kind of want to look at. Now, if you want a little more deeper information, let's say you want to really dive deep into this thing, the playlist for all my finance videos is right up here, and you can kind of check them all out. I'm going to post more videos as we go along, including that fair credit video and the exceptions video coming up soon. So until next time, remember that RV always stands for toolkit and sense of humor.